Morning, everyone. Now, I'm not one who's typically a very big fan of the spookiness, right? I'm not a huge fan of Halloween in general, but I did put together something, a little treat for the audience today, where I've crafted a brand new theme song that I'm going to work on a little bit more, so we have a nice little on-theme theme song for the rest of Halloween. So here it is, guys. I hope you enjoy it.
The time has come, it's almost here. Another day on the markets, approach with no fear. The stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Digging deep with no regret. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight, the stage is set. Digging deep with no regret. Red and green bars leading the way. Hold on tight, the stage is set. Digging deep with no regret. Red and green bars leading the way. Welcome to the angle. No time to delay. Cashing in on the highs and lows, where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel the run with a fire that never dies. Hold on tight, the stage is set. Digging deep with no regret. Red and green bars leading the way. Welcome to the angle. No time to delay. No time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I am to turn complexity into clarity with a shot of adrenaline. And today is going to be a wild one. Like I said yesterday, today and tomorrow are going to be jam-packed full of catalyst drama, and we've already started out today down a little bit in the pre-market due to some Chinese tariff drama once again. And on top of all that, we have bank ERs right now. And then on top of all that, we have Fed speakers right now. And then on top of all that, we got Powell's talking midday. It is going to be jam-packed the entire day, ups and downs all around. So make sure you're on your toes, and I'm going to help you through it all today on today's program, tell you exactly what to watch out for, just like I did yesterday, and tell you guys what to keep an eye out for so you're safe. So let's just start there and get an idea of what we're looking at for the day and get an idea of what this gap down means before we even get into the whole rigmarole of the rest of the day. So this gap down, I'm calling BS on already. Here's why. A lot of the gap down, or what's perpetuated from this gap down on the market, was an incorrect translation of what President Xi said, saying that he would fight the tariffs, fight the U.S. with the tariffs like strongly or something like that, which was translated incorrectly. What he said was essentially translated, if you want to talk, we will talk, and if you want to fight, we will fight, so to speak. So the market just heard the second piece and not the first piece, which if you're a rational individual, you're thinking to yourself, yeah, that's pretty valid. If you're coming to me and you say you want to talk to me, then you're going to want to talk to me. And if you want to fight me, then I'm going to want to fight you, right? Like if you throw a punch, I'm going to punch back. If you just want to talk to me, we can just talk. right? That's not an irrational statement by any means, but the market only heard the end piece there when he said, we're going to fight with all of our strength. It's like, okay, yes, you would fight with all your strength if anyone punched you in the face. Yes, that makes logical sense. So the market took that information and went, dump it, and dumped overnight, or at least into the pre-market here. We actually came down a few pennies short of my LOI here at 654.55, pre-market low 654.52. Pretty damn close, pretty happy about that. Kind of did a quick little double bottom there and fired back to the upside. Now we're sitting around 657.21 as all these bank ERs that are coming in right now in the pre-market and into market open. So let me give you that information right now real quick. I'll give you the exact times here. Because I know they're going to be, or I know a lot of them already happened, and some of them are already having their earnings calls, but some of them are having their earnings calls while the market is open. So BlackRock had their earnings call. It started at 7:30. JP Morgan, had their earnings call at 8:30. Then Goldman Sachs is having their earnings call at market open. Wells Fargo is having their earnings call at 10 o'clock, and Citibank is having their earnings call at 11. On top of that, as I alluded to before, Powell speaking at 12:20, and we have some other Fed speakers speaking towards the end of the day as well. So it's going to be a difficult one to navigate if you are not careful, and you want to make sure that you're smart. So take everything that I say today at least under advisement with your trading. At least think about what I'm saying, because a lot of times we're going to focus on when to be risk on and when to be risk off on this program. And in an environment like this, you probably want to lean towards the risk off. I had a little talk today with our community over Exclusive Trading, which if you want to check that out, the link's in my bio, and basically said how you can still trade today if you want to trade today, but maybe trade equity, or if you're going to trade options, buy more time or trade lower size, right? These are the things you want to consider in a more volatile environment, because when the environment is more volatile, you can make more money faster or lose money faster. So consequently, you don't have to put up as much money at stake to make the same amount of money you're used to making, as this is an example I've given many times on this program. So keep that in the back of your head if you do consider any trades today. June said, why does the intro song fit so well? And I spoke about, you guys heard a little Halloween-themed intro song. If you haven't, make sure you rewind the stream. I'm actually going to tool around with it a little bit and make it even better for tomorrow. But I'll have a little seasonal Halloween theme, and I'll make a seasonal outro just to keep things fresh here. So check that. Make sure you check that out. Tanabe, not sure. Saying, what's up? Good morning, Tanabe. And Hatchet dropping the morning in the chat. Good morning, my friend. Hope you guys are all doing well. Hope you are keeping your heads afloat in what is a very, very, I want to use the word rickety market right now. A rickety market. Now, I will tell you something. I am wearing this sweatshirt for a specific reason. If you stay tuned for the whole stream, you will find out. I'm seeing if something specific may happen, and that will only be revealed by the end of the stream. I'm being very cryptic for a reason. It's stupid, but I want to see if something can happen. You guys can guess in the chat if you want, but I'm wearing a zip-up sweatshirt intentionally for a reason. So we'll talk about that at the very end of the stream. It's dumb, but it's just for kicks. Anyway, let's take a look. Seasonal Christmas donkey version coming. I have the seasonal Christmas songs already done. Christmas is my favorite holiday, so I've got, I think, 4 versions of a Christmas intro done. Tanabe. So, yes, absolutely. And a Dominic the Donkey Christmas one. I'm half Italian, so that would hit pretty good. that would be funny. Neegum dropping the good morning. Good morning, sir. Hope you're doing well. Free sweatshirt, not a free one. No, this is actually by one of the bands I like, Horror Section, which is also like a Halloween themed band, or kind of. So this is their merch, but underneath it is something else. So just saying. Anyways, take a quick peek at the market. We talked about SPY here briefly. We talked about the gap down, so I don't really need to go into that. And obviously, the Qs and IWM moved along with that. Now, IWM moving a bit lower than the Qs at this moment in time. Interestingly enough, I'd like to point out how SPY is only down, comparatively, 0.8%, while tech is taking a little bit of a bigger hit, down 1.19%, and IWM down even bigger at 1.26%, which is interesting because a lot of the times, SPY is somewhere between the two, right? Where either tech is holding on very high and small caps are selling off or kind of middling, or vice versa. And this is an interesting scenario where we see the overall S&P 500, so those top 500 names in the market, are performing better than the NASDAQ and the Russell 2000, which is interesting because typically SPY falls in between the two. So it's interesting to see it outperforming the other two indexes, at least right now. Tanabe says, bro, Dominic the Donkey is permanently etched in my brain. Your fault. It is as the kids would say, a banger Christmas song. Jingity jing, it's Dominic the Donkey. Anyway, right now we're taking a peek at volatility in the pre-market, up a little bit, and we saw how yesterday, and I spoke about this live in our Discord community later on in the day, how the VIX was actually coming down and broke low a day, but UVXY did not, which actually indicated that volatility could expand a little bit longer, like medium term, right? Meaning the rest of this week, comparison to spot VIX, which is right in that moment, right? So that was an interesting thing we saw yesterday where all UVXY did move down. It did not move down at the same rate of change, I guess is what we could say, as the VIX did yesterday, which is very interesting to see. So we're going to see how that relationship perpetuates today. It makes a lot of sense when you think about it because, as I alluded to yesterday, today and tomorrow we have a lot of catalysts coming down the whole news pike here. So having a higher UVXY and a lower VIX, at least in that period of time of yesterday's trading window, made a lot of sense. So we'll see if that continues on today as well. Google down at around this 240 range. I'm still long on Google at this point in time. Had a really decent candle yesterday, and if we didn't have this overnight news, we'd probably see a continuation today. We may still see a continuation today, but at least in the pre-market right now, gave back a good chunk of it down at 240, and basically all of our big tech names are red at the moment. Nvidia down in the 185 area, down 1.6%. Microsoft holding okay, but it is underneath that key level. This 512.76 is a very important level you want to see watch you want to see hold on Microsoft, as well as this 510.80. So right now you're at 510.55, so we're beneath both. Now it is pre-market, so we'll see. But this is a key area we want to see hold on the daily. So we'll check back on Microsoft as the day goes on. Apple actually faring pretty good in comparison to all of its Mag 7 peers. Currently down marginally at 0.5%. We tapped that little gap fill there. Wicked it up yesterday so far, but we'll see how that plays out in today's open. Tesla had a nice little push up to this range later on in the day yesterday. As I said, I wasn't anticipating that kind of move, but now back down 425 right now in the pre-market, down 2.5%. Amazon did not close over that 221, and in fact now is firing down at 215 even, essentially, which puts it underneath this entire range. So watch for that 200 MA tap, 214.45 on the daily here on Microsoft for potential short-term long entry or even a swing entry if you want to be ballsy, if you think the market's going to turn around. You also have some confluence there with the 50 MA currently at 214.08, so pretty decent risk to reward there if you want to take a stab on Amazon, maybe even on like some sort of spread, which I might personally do during the program if we get that opportunity. We'll keep an eye on that. In fact, I'll put an alert there. We'll change this alert to, we'll just keep it at 214.90. And we'll keep an eye on that. Oh, you guys can't even see that on my screen. There you go. You can see it move over there. All right, see if Amazon will be in play today, potentially. And Meta, again, I keep saying it on the program, back at this key level at 708.02. This gap from earnings back here. Once again, you can see it better on the daily chart. This is a battleground for Meta, and it has to substantiate above this if the bulls are going to turn this around. The AEMA pushing it down right now, so we're going to see in the next day or two what's going to come of this. It looks like it wants to reverse here. This news today, at least the overall market sentiment, could weigh on this like an anchor on its heels going into a lake. So we'll see how that fares. Guys, we got 1 minute until the market opens. Do me a quick favor before the market opens. If you haven't already, interact with the stream however you like. Drop a what's up in the chat if you're watching live. Drop a like on the stream wherever you are. YouTube, X, Instagram, Twitch, Kick, everything else I'm on. Drop a like, a follow, a subscription, whatever you got. I appreciate any support you can give to the program. We have a very small, tight-knit community here, and I love that you guys will love the program and love to support the program, and showing that support in any way you can, I greatly appreciate. And if you haven't already, pop on over to the YouTube channel once we hit 500 subscribers. This will be an everyday show, so if you like the show and you want more of the show, go over to YouTube, hit that subscribe button. All right, let's get into the market that's about to open any second now. In 4 seconds, Eddie dropping the "you're" in the chat right before market open. Let's go. Yours in the chat. All right, YouTube did this thing where they changed all your names now. So some of you guys, I don't, they changed, like, you used to have shortened names. So like HR, Regis BMR. I don't know if you're someone who used to watch or you still watch, or if you're new, in which case you dropped the AO. So AO, but I don't know. So sorry if some of your names are different. Yeah. See, Eddie just noticed. He said, did my name change? Wasn't it just Eddie before? It was. I don't know. YouTube changed, had an update. So if you are someone who watches the program and you had a name before, just let me know that's you and I'll remember, or hopefully I'll remember. But anyway, market's opening. I'm getting flooded with alerts right now. EB dropping the good morning. Good morning, sir. Hope you're doing well. Not a big move off the open here right now. Pretty flat. Again, we're going to have a very, very volatile day. Once we get a few candles in here, we'll kind of have an idea of what we're looking at right now into the open. I also have a new name I want to share with you guys. I entered long on yesterday. Depending on how it goes. I kind of want to share it now because it's at a good buying opportunity in my opinion. It's a little bit above my entry, but it's still at an okay price to get in. I'm getting flooded with alerts right now. I had a PayPal alert, an eBay alert, an Nvidia alert. I'm getting blasted. So we're going to have to go through all of those in a little bit. Wow. Flooded. So that means whenever I see all these alerts come through, A, there's a lot of price action, but B, again, as I mentioned yesterday, a lot of stocks, a lot of names I'm interested in trading are hitting an area where I may want to consider a long entry. So, something to know. HR, I'm going to call you HR then, unless you want me to call you something else, man. But he said, pretty new, been watching the last few weeks. Hell yeah, man, appreciate the support, and I'm glad you're enjoying the program. At least I can insinuate that if you've been watching for the last few weeks. All right, right now, Q's pretty flat, SPY pretty flat from our gap down so far. Not showing a ton of strength at the open. Right now, IWM giving a little bit of a kick here, but nothing too crazy. VIX at a 2167 right now, moved up, and WIC 2218. We're going to want to see this. If you're a bull on the day, get under 2030. I know it sounds like a far cry with the VIX up about 14%, but again, we have a lot of catalysts to get through today. So while volatility could violently continue to expand to the upside, it could also decay extremely quickly as well. So there's a probability both ways until we get more clarity. And the market, in my opinion, is going to be preparing for Powell, regardless if he says anything of importance at all. It doesn't matter. The fact that he's even talking today is more than likely going to impact the options chain. And let's take a peek right now. Yeah, look at this right now on SPY. At the money IV, 31% on your 0 DTEs. 30%. That is double our rolling 52-week IV. The market is pricing in massive volatility today. Massive. Which makes a lot of sense with the VIX up 14%. But seeing at the money IV this high, double, over double what its rolling 52-week IV is, you need to be ultra careful if you are day trading right now, especially if you're buying to open contracts. You need to be very, very, very careful because of any sign of IV decay. You could be right and say, if I buy call, price go up, I make money. If I buy put, price go down, I make money. Sure, but guess what? If that IV decays, if the stock market just kind of moves slowly in the direction you picked, you could be right in the picking the right direction, but still be wrong because you suffered from what's called IV decay. So I would be ultra careful on trading this open in general. I don't care if you're a bull or a bear. Like I like to say on this program, we talk about risk on versus risk off. And right now, this is a risk off environment. Do not be risk on in this environment. I'm not telling you not to make money. What I'm telling you to do is not put all your money on the line right now. Be very, 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 very careful until some of this volatility subsides. A very simple rule of thumb that I like to share with you guys, and I'll tell you in general, the higher the VIX is, the lower the probability of your success. In general, generalized rule, you could still be very successful trading high VIX. I've traded high VIX environments and made a lot of money. Like, you can do it. But in general, the higher IV is, the higher the VIX is, the higher VVIX is, the lower chance of you being correct in the market in general. Just in general, right? So as a blanket statement, when you see a high VIX environment, you probably want to pull back a little bit and be a little bit more careful than you otherwise may be. Just saying. Nice little spam ad from Kick. Someone over at Kick is telling me to get AI chat box to keep my chat active. Well, most of my chat's on YouTube, and I love you guys over at YouTube. So Kick can suck it. Anyway, Google getting a decent push here out the gate. not bad. Not great, but not bad. Nvidia dropping like a rock so far. We tripped my... Remember this 183.30 level? How important this 183.30 level was on the daily. If you've watched the program now for a little while, you know how much I've talked about this 183.30 level. We just knifed it with a $2 drop after a gap down. So we're down about $6-7 on the day here on Nvidia. That is a big fall for Nvidia. If we go any lower, if we tap the 50 MA on the day, I'm taking calls. I know it sounds crazy. It sounds ballsy because it is. But, well, depending on where I zoom in, zoom out here, right around there. Considering the price action from middle of the year, the last 4 months, from 620, we have the 50 MA right now at 179.46, and the POC, so the point in time where the most volume was traded per price, not per time, is currently at 178.65. So between 178.65 and between 179.46, we should see some area of support there, theoretically. So if you were to take a long stab on Nvidia, waiting another buck or two on an intraday trade would be it. Now, I will say this doesn't look great on the daily chart at all. The weekly chart does look like a little tired, like it could use a rest. The monthly's not bad. But getting some level of pullback here isn't insane. I'm just speaking specifically from a day trade opportunity, especially on quite a knife drop here, down 4%. You guys know I like to take the other end of the trade, and that would be the other end of the trade, so we'll see. Volatility just mushing here. UVXY at 1237. The VIX is all the way up at 2227, up 17% today on the VIX thus far. What's the IV like on these? So ironically enough, even with this knife drop on Nvidia, so down 4% on the day, the IV is in line with the last 52 weeks. So 52-week average across all chains on Nvidia right now is at 52% at the money. IV, again, for contracts expiring Friday, around 57. Your puts are a little bit more higher IV, but that makes sense, but around 57. So only a few points higher, which is interesting to see that the IV isn't even more high on Nvidia than it is currently sitting at right now. So that is something to take note of. The market is eating it right now, down about 8 points on the SPY, 654.80 right now. The SPY is trading. And if you guys have watched the program, you guys know how I talked about hedging a small account. If you don't know what I'm talking about, there's a video on my YouTube channel about that and how you could take a small amount of money and protect yourself from moves like this. And I'm very happy I have a hedge on right now, because that is hopefully going to protect me from any sort of crazy downside. Wow, we're at 180 on Nvidia. So we're at that price right now. 179.72, wicking it. I'm gonna take a stab, probably. All right, I'm long the 182.5 Nvidia calls at a 295 average. Pray for me. Now, the key here is to not be greedy. That is the key. I'm going to add this to the top of the watch list. And again, we're playing this mainly because of where it's sitting on the daily chart. And there should be some level of a bounce here, which we're already seeing, which is fantastic. So we should see a little bit of follow through here where I can make some money and kind of get out of the way, put a stop loss on, etc. I'm going to take my first trim here for 8%. Actually, I filled a little higher. What did I fill it? There we go. 9%. Or it's 10. 10%. 10% gain. I did a market order and then I did another market order. Nothing crazy. And what you should do, actually, I'll lead by example. I'm going to put a stop loss on at break even, because we are betting against the grain here. Like I said, this is not going to be clean. It's not going to be easy. We're just betting on some level of a mean reversion off of that daily area of, it's not even really support, but there's so much volume there, and coming off such a hard fall, again, I want to take the other end of the trade. What I'd be looking for here is basically the top of this candle or the low of this candle here. So at 933 or 934, essentially looking for anything north of 182.37. So essentially putting these calls in the money. That would give me about $1 or so appreciation. Currently at a delta 45. So gamma's for something north of 370 a contract. I'd be pretty happy. But I have that stop loss on in case things go south. So either way, this is a win-win. Got to obviously get over the 8 EMA here before getting any level of any sort of substantiated reversal at all. So we'll see how this fares. Now, POC is right here on the day, right around this 180-ish level here, 188, 188. So we'll see if the bulls can crack above this. Basically, your trigger here is 181.12. Very simply put, especially when you're in the early hours, you can use very easy levels to look at here. It's just the high of this candle at 937. Breaking over that will more than likely substantiate about $1 push here. And that's where I'd be looking to go runners, at least take another trim, bare minimum, move stops up, etc. Because again, I am betting against the grain. The wind is blowing in my face, right? So that's not good. If I'm ever betting against the grain, I need to be quick when I take profits. I need to be smart when I'm taking profits. I need to not be greedy when I'm taking profits. This is an early indication here that there could be a bear reversal. We're not breaking the 8 EMA. We're leaving a wick behind on every tap. Well, this candle's not complete yet, so that could change. However, flip side of things, looking at the bull side of things, high volume bounce off that daily support, pushing up here so far above POC with MACD curling. And also just in general, you're down 4%, which is a little nutty. So getting some level of a mean reversion, some people coming in, dip buying down here, again, on the daily support, even short term, should substantiate a push higher. We will see. That's why I took profit very quickly on these for about 10% or so. Put a stop loss on. Now I'm risk-free, essentially. So worst case scenario, I get stopped out. Maybe I have some slippage of a few bucks here or there. But ultimately, this either has about another, like I said, at least 70 bucks on it, or I get stopped and we sweep the downside. Which either way, again, it is a win. So no complaints here. We will see if that works out. I just got a Jack alert. I know we spoke about Jack on this channel. I made a little video on it, so we'll take a peek at Jack. Because that is I'm going to put out my watch list before I forget. We'll pop back to that in a second. Just keep an eye on NVIDIA right now. Those contracts trading at 305, 310 right now. And again, just kind of kicking around this POC here. As I said before, it is leaning bearish with these 3 wicks here on the 8 EMA pushing it down, and my stop got hit. That's why I put a stop on. Sorry if you hear me click-clacking. I'm just letting the members of our community know. That's it. Not bad. 10% gain. I might get back in. We'll see. But I'm not super excited to get in. If it's under 180, I don't love it. I like it better if it can sweep a little lower, and I'll take another stab perhaps. I would prefer it basically in this range at like mid 178. So if we lose another $1 here, I might take another stab. So we'll keep an eye on this specific contract, the 182.5s for this week. Just so you guys know the volume on this one now. It is Wednesday, and obviously we've moved around the money. I'm not saying in the money. I mean, it was in the money obviously at open. So the volume on this chain tends to be higher because now it's more at play. So it's not deep in the money or deeper in the money. It's now at play. It's around the money. But the volume on this chain right now is 10K on the day. Open interest was 8,000. So there's a lot of people trading this chain specifically. So as a day trader, I want to be on a higher volume chain that's going to give me the liquidity I need to get in and out. So we'll keep an eye on it. If I don't get my entry, it's fine. If I do, great. It's again, a gain's a gain, a win's a win, and we'll take it. Nothing too fancy, but I'll hang my hat on any sort of win I can get right now. I ain't mad at it. Let's check out those. Nice. My spreads are up almost 100%. My bear protection spreads. So we'll see if that I've got a 650. Was it 650, 649? Yeah, 650, 649. Bear spread. So if we sink 649, I'll be a happy man. I don't think it's going to happen. It can. But that'll push me 200, 300, 400%, which would be sweet. But we'll see. We will see. All right. Let me see if I got anything else moving on my watch list here that I want to share with you guys. So many things got smacked. It sucks. There's so many like really solid setups that just brutalized. But you know, I could share one with you. Would you guys like that? One's in the chat. You want not even a diamond in a rough. It's just rough out there in general. But if you want one name that is something that offers some potential decent upside with some NVIDIA news rolled into it as well. It's a semiconductor. If you have interest in that, drop a 1. If you don't care, drop a 2. If you just want me to focus on the marketing, drop a 2. If you want to know about that specific stock, drop a 1. Meanwhile, VIX is moving higher, about 19% on the day, 2266 on the VIX, UVXY at 1250 on the day. Big moves on volatility right now. Let's just see if I got any news coming through. It's funny, the market on open imbalance wasn't even that bad. S&P was only short 329 million. So even on that gap down, we weren't seeing a ton of fear, interestingly enough. If UVXY can't break 1250, then I actually don't think volatility goes much higher today. I think it would actually kind of mellow out around here. We'll see. If it breaks over 250, I think it could mark up to 13. If it breaks 13, then volatility can just mush. So you want to definitely be careful. And if that happens, then my SPY bear spreads are definitely going in the money. If we see a UVXY 13, my bear spreads are definitely going in the money. We're definitely seeing a 50 MA tap, or a 50 MA break even, on SPY, which is concerning. We got a few ones in the chat. HR dropping the 1, Wayne's dropping the 1, and Tanabe dropping the 1 in the chat. Okay, we'll get to that in just a moment then. So the 50 MA on the daily, I want to talk about this real quick, and I want to touch on something else I said yesterday. The 50 MA on the daily right now on SPY is 651.42. Now, you heard me yesterday mention how the old market adage of markets don't bottom on a Friday, and how there is a very high statistical significance of a Friday low breaking the following Monday. Again, someone can fact check me, but I believe it's like over 95% of the time. If the SPY has a close on a Friday lower than 1.5%, then it breaks the following Monday. I said live in this program, I don't see that happening because of the news catalyst reversing, so to speak, that we'd actually have one of the inverse of that where we'd stay green on the day, and we did. Now that we're where we are, what I would actually like to see on the day is this. Here's my full read on the day, okay? The Friday low is 652.84. So far, the low on the day today is 653.17. Not far off from the Friday low. Keep in mind your 50 MA on the daily is 651.44. What I would like to see on the day is pre-noon, so before noon, I want to see if SPY, and this is only as long as UVXY stays where it is, break that Friday low but stay north of the 50 MA, post-noon, leave a wick, and close higher. That's what I would like to see on the day, meaning we close above 657.41, which is the current high a day. Will that happen? From a technical standpoint, it would sweep your Friday low, which makes a lot of sense. It would allow you to tap the 50 MA on the daily, which is where a lot of people more than likely are waiting long. And assuming volatility doesn't get out of hand, so assuming the UVXY stays sub 1250, the VIX really doesn't breach this 2309 for the most part, that would allow volatility to feel a little overextended and want to come back down pretty violently if we have a catalyst to cause a sharp reversal. Well, what better catalyst than to have Powell speaking midday? Now, this is speculation at this point. I'm just saying from what we're seeing on the chart, in combination with what we have planned for the day, that would be like my chef's kiss setup. So, if I'm playing a speculative trade on the day, I would wait for this Friday low break and I'd open longs, risking the 50 MA, or I'd wait, depending on momentum, I'd wait for the 50 MA tap. So somewhere in this range of 652.84 to 651.43, I'd want to contemplate a long position, depending on time of day and depending on any potential catalysts that are currently at that time of day, and put a stop somewhere just shy underneath that 50 MA. That would be the day trade setup I'd be looking for today. Assuming, again, here's the key point here, that volatility doesn't go out of whack. Assuming we keep under 1250, which I don't know if that's going to be realistic on UVXY, and assuming we stay under 2309 on the VIX. On that kind of fall, at least from how we're sitting here, depending on how violent of a fall it would be, meaning how quickly, the VIX could breach that and keep going, in which case, if I do take a stab, it would be on much lighter size than otherwise. So it is something to ponder at this moment in time. So we'll circle back to that later in the show. But let me share with you guys a stock that I entered long on yesterday, and even entered long on this name in our small account over at Exclusive Trading. So guys, I want to share with you this name. This is Powie. Hold on, let me record this in case someone wants to see this later. All right, guys, so this is Powie. So this is a semiconductor company that recently, as you can see, had a pretty big day here yesterday. And I am, full transparency, I am long this name somewhere around this $42, $43 area after this big green candle. In fact, I went long yesterday during this big green candle. And part of the reason why is because of it having some NVIDIA partnership news or collaboration with NVIDIA. But that's not the only reason. I want to highlight how this is sitting from a technical basis and why you might want to consider a long position in POWI. After we broke this small little area of consolidation just shy under the 0.786 retracement, this POI here, this LOI here at 39.15, we sweeped lower, and this volume that we got off this NVIDIA news is the highest volume it has seen in the last, I believe, what was it, since 2021, right here, is the highest volume it's seen since the stock was essentially at all-time highs. It was just a few shekels short of all-time highs. And past that, it is the highest volume since all the way back, I think it's even back here, like back to 2010. So insanely high volume. But what really caught my eye here is the monthly chart. This is the 200 MA on my chart. And for those of you that come to watch the program live on the Atomcash angle, you can see this dark blue line on my chart here. And this is my monthly 200 MA, which is a line I always love to trade on the monthly charts because of how it typically gets some level of a violent reaction. And right now that number is at 39.68. We wicked beneath that literally the day before, well, okay, a few days here, but just shy before that, before getting a powerful sharp reversal back to the upside here, and currently closed just shy underneath my 50 MA, my purple line here, and now opening back above it, at least currently. Now the market, at least right now, is having a pretty bad day, and Powie is actually holding up pretty decently. It's at least green on the day, which is more than you could say for even some of the Mag 7 names today, which is a really nice sign to see. This is a name where if you're long equity, you could probably chill in this for a little bit and wait out a strong potential reversal here on the daily, the weekly, and the monthly. Considering a decent risk to reward profile here of even to my second price target, only my second price target, you're offering a 1.5 to 1 risk to reward setup, considering a stop just below this LOI of 39.15. And only considering my first take profit at about 12%, up here at 47.16. Once it breaks over this 47.16 area, you are going to be in the midst of a weekly reversal as well. So you're already going to be at the start. You're already really at the start of a daily reversal here, which isn't really confirmed yet. If I'm a betting man, we come up a little bit and then come back down before going higher. But how it's sitting right now in the weekly, once you're getting over that level, you're basically getting your feet wet for a weekly reversal here as well. and bouncing off that monthly support here. There's nothing. Let me make this clear. This is in a bear trend right now. On the weekly chart, it's in a pretty strong bear trend, and it was in a bear trend as well before yesterday's news. So take that with a grain of salt. That's why I went equity, not options on this name. But with that being said, this has the ability for a sharp reversal, especially having that NVIDIA catalyst to go along with it with this kind of volume. This kind of volume you're seeing on a name like this doesn't really just come out of nowhere. Now, keep in mind, this is a $2.4 billion market cap company. So it is in that kind of like mid-cappy territory where it can move very quick if it appreciates very quickly. And what you would see, at least in my opinion here, if they weren't squeezed out yesterday, more people who have been short this name continuing to get squeezed here, assuming we see a break over that $47 area, which we saw actually in the pre-market up to 50.11, shot back down today, and we saw some bearishness with the market today, so it makes a little sense. But on the daily chart here, this one's still looking really, really, really solid, and I definitely think a long idea on equity on Powie is a very decent risk, assuming you place a stop around this 39.15 area. You're not risking a lot to the downside here, and really to push to the upside, I mean, even just to your GP, you're up at 54 bucks. So 10 bucks to the upside, $5 to the downside. That's even a 2-to-1, even if you got in right now. And obviously this thing could just go all the way back up. Where I'd really look to tighten up stops is up at 76 bucks. But this is a name that has been bearish, has been overstated as a bearish name. Financials aren't the worst thing. The company in general isn't that bad. This fall, in my opinion, is a little overstated, and getting that catalyst from NVIDIA's collaboration with them off of that 200 MA makes this a very, very interesting setup here, and could actually lead to a monthly engulfing candle. The high of the last month's candle is 46.24. It's only $2 away. So getting a high volume monthly engulfing candle with 2 weeks left in the month is a very, 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 very high probability, and for most people that is what they're looking for on a longer term time frame to get out of a bear trend, or at least the start of getting out of bear trend. And that's why I think Powie could be a very interesting trade and its current profile right now to consider for your portfolio. What do you guys think about Powie? Like I said, I longed this name yesterday on the rip, which is not something I typically do, but after reading into it a bit, I was like, all right, we're gonna do this. And not mad. It was much, much better in the after hours yesterday. It was, like I said, it got up to 50 bucks. I was pretty happy. So we'll see when and if we get back there. But liking Powie quite a bit here. Let's go back to Jack in the Box real quick, because I had an alert fire off here. All right, so better entry was actually yesterday on Jack in the Box, so I might have missed this in the rigmarole of everything. The best risk to reward here on Jack in the Box is actually somewhere around like high 16s. So I might have missed it on the day here. Now it's 18, because this is a risky one where I'd want to keep that risk reward mega tight. So I'd want to basically risk the all-time, or I believe this is the all-time low. It's a 52-week low at least. Yeah, it's a 52-week low. It's kind of bear flagging here if you like flags. So I would prefer to get a lower entry on Jack. It's not bad yet, but this one offers really solid risk to reward. What is it? Yeah, if I can get an entry like high 16s, that's offering me almost a 9-to-1 risk to reward to even get back to the top of this chop range, which would be fantastic. So I wouldn't sleep on this one. This is one of those names I talk about all the time where you're only risking 1 to 2% of downside for, I mean, typically, obviously, infinite upside. But in this scenario, even getting to the top of the range here, 23% upside. Keep an eye on Jack in the Box. Set some alerts. Anything sub 17, high 16s is where I'm itching to enter. I missed it yesterday, where honestly, I probably wouldn't have entered. The low day was 17.22. Again, I want to see high 16s on Jack, and then I'd consider a long entry. Let's pop back to the market, see what's going on there. Check out NVIDIA. All right, so quick lesson here, because this is very important if you don't understand IV and how to read Greeks and whatnot. NVIDIA right now is trading higher than my highest, or than when I trimmed it out during that trade, which was right around here at 940. At that time, the contracts were around $3.25. Those contracts right now are only $3.11. And the IV has dropped 5%. This is the impact of IV. This is a tiny example of what IV crush, even on this very small time frame, can do, where the stock traded above, or right, even around, I should say, where I trimmed it out the first time, and the contracts are a whole 20 cents lower than they would have been, at the beginning of the market open. So that's why you always want to be super careful, especially if you're like catching a knife here on high IV. You want to be able to sell high IV or sell it when the IV is still elevated to capture some of those gains. All right, market did a little bit of a V bottom here. I'm not going to complain about that. Volatility coming down just a tad. A little decent V here, V on the Qs, and IWM actually leading the pack. IWM looking strong in comparison. In comparison to the Qs are not looking great yet. SPY is trying to make a hammer. I'd love to see SPY fill the gap even before Powell speaks, and when Powell speaks, just rocket this. I'd prefer to be long in this environment. I know that sounds crazy. Let me share something with you guys, and you can fact check me. Anytime I say you can fact check me on this program, no one's going to, but I want to at least say that. You can fact check me on this. In a bear market, there are more green candles than red candles. So in the definition of a bear market. So once we see a 20% drawdown on the SPY, what puts it into a bear market, there are more green days than red days. The red days, though, just tend to look like this, like that Friday, right? The red days are sharper, they're more exaggerated, but there are actually more green days in a bear environment, believe it or not. So, especially in a bear environment, I like in a higher volatility bear environment, I want to say, I actually prefer to be long, believe it or not. Now, my risk appetite changes. I tighten up things a little bit more than I may otherwise do, but I'd actually prefer being long than short just because of the fact that I know there's actually a higher probability of a long trade working than a short trade in a bear market. In general, the market wants to be long, not short, right? In general, SPY wants to always go up, right? It is, and I actually had this conversation with my father last night. I said, if you're going to invest in anything and like you don't know what you're doing, or you want to be super safe, you want to invest in the S&P 500 because guess what? It is the top 500 best performing names in the stock market. So when number 499, 498, and 500 are not performing well, guess what happens? It kicked out. So in general, shorting the SPY, and I do it all the time, so I'm not saying it's a bad thing, but being short consistently, I should say, the SPY is a bad idea because you're betting against the best performing companies. So theoretically, you'd want to be on the side of the best performing companies, and theoretically, the best performing companies will continue to perform because when they don't, they are booted out. So be conscientious of that. Tanabe said, hit extreme fear today in the fear and greed index. Actually, very nice. Yeah, actually, I think I spoke about that yesterday. Let me check it. And I brought that up on how the fear and greed index, I believe yesterday hit fear. It was at like 24 or whatever. Or like, I think the crypto market hit extreme fear and regular fear and greed index hit fear. And what is insane about that is like we've only fallen. I can't see because the doodle's in the way. 3%. We've only come down 3%, yet we're hitting extreme fear, right? And I'm seeing a lot of people on social media calling for the destruction of society as a whole and just saying, now's the time to be short. I'm going to tell you on this program, now's not the time to be short. Maybe have a bear hedge on like I personally do, sure, and make sure that's a logical hedge. But now is not the time to be balls to the wall short. I'm seeing a lot of people being like, I'm now net short. Good for you, bro. Hope you take those profits because you're going to get railed. I'm sorry. But when volatility is where it is, and unless volatility continues to climb, unless there is a wider gap in price disagreement, which we're seeing today, or unless you're planning on dramatic macro news that affects the market as a whole and affects every single industry, this is just a pullback. And it's going to go back up. Just saying. Now, that doesn't mean we're going to see periods of weakness and everything. And sure, if you're taking a short position, then you might make money, obviously, on a swing or whatever, then okay. But if you are short, I would take your profits when they come. Now, for me personally, like I said, I have a bear spread on the market right now that has gone profitable 2 or 3 times, and I have not closed it out because the purpose of that spread is really, honestly, to lose money. I know it sounds insane, but that spread is there in a worst case scenario, which is a very likely thing that could happen. I make max profit on this, which is going to be about 400% in the event that SPY pushes sub 649. That's when I hit max profit on my bear spread. And I've had this open now for a month, something like that. This is just in case, because in that scenario, most of my long equity is going to get stopped out. So I'm safeguarding myself. And again, there's a video on my channel about this if you missed it. Most of my long equity is going to get stopped out, except for the names I'm like mega long on that I don't care about that are going to be fine. But most of my like trading long equities are going to get stopped out, and I'll have a few losses there. But those losses will be cushioned by that bear spread. So yes, I will lose money, but I'm not going to have a detrimental loss on my portfolio. I'm going to be just fine. And if the market continues to the upside, which I would prefer to do, guess what? All of my long equity is going to do its job and pay for the bear spread plus more. So yes, the bear spread will lose me money, but it is literally what options are designed to do. And some people, and you guys in the chat, I'm sure a lot of you trade options. Drop a 4 in the chat if you're an options trader. What people don't recognize is that options are actually a tool that are meant to hedge. They're meant to be insurance. That is actually what they're meant to do. Now, people like myself, and I'm sure people like you watching, you trade options, right? You buy them back and forth, you make money on them. There's nothing wrong with that at all. I do it every single day. But they're mechanically made as insurance. It is essentially insurance for your portfolio. That is the purpose of options. So to use them as anything but that, at least in some respect or another, can be foolish, which is why I'm going on this little tirade of saying I might lose money as a bear, but guess what I'm not doing? I'm not losing my capital. I'm protecting my capital on my portfolio as a whole because what I'm focused on is capital preservation. When the markets are uncertain, you want to focus on just capital preservation. If you can make money in that environment, God bless, make the money, right? By all means. But if you net neutral, if you net zero, you're flat when the market's doing this and the fix is going out the butt and everything, you're winning just as much because there's a lot of other people in that environment that are getting decimated. They're getting rocked. Their portfolios are down 10, 20, 30, 40, 50, 170, whatever number. They're down bad, real bad. And you can just look at it and go, I'm down 0.5% today. At least I didn't blow my portfolio. At least I didn't do something real stupid, right? The goal, and I talk about this ad nauseum in our Discord community because especially as retail traders, a lot of people get sucked in with wanting to see the big gains, the big percentages. Everyone wants to be a millionaire overnight. Who doesn't want to be, right? But the goal is to preserve that capital. That's the very first step because you can't make money with no money, right? If I have $100, a 10% gain makes me $10, right? Big whoop. But if I have $100,000, a 10% gain makes me $10,000. But how can I get from 100 to 100,000? Well, the only way I get there is by having more money. And I can't have more money if I'm making reckless decisions. If I can't protect the capital I already have, and when the time is right, grow it. When the opportunity presents itself to make money, you make the money. If the opportunity doesn't present itself, or it's a little sketchy, or whatever, shifting defensive, not trading at all, right? Even just trading equity with tight stops, whatever your game is, those are the people that are going to last long term, that you're going to see may not have these wild charts that do this, that they post on their Twitter and say, oh my God, I made 100% this month in my portfolio. Listen, a little controversial take, but if you're consistently making over a 5% gain on your portfolio every single day, so consistently, you're more than likely over leveraged. So that might be a direct message to some of you listening, because I know, especially if you're trading a small account, it's very easy to make 5%. But that doesn't excuse the fact that you're probably over leveraged. So there, and don't get me wrong, there are big days. Some days your port might be up 10% because some stock you have long may had fantastic news and it tripled overnight or whatever, and it was a big one that you're really holding. Like, there are outliers, obviously, and same to the other direction. But if you're consistently making 5 to 10% every single day on your whole portfolio, you're probably taking over leveraged trades. You're probably taking on too much risk, and you're probably going to get bit in the butt pretty hard one day. And you could watch me and you can click off right now because you disagree, but you'll be back and admit that I'm right because I am right. I'm telling you right now, I know I'm right because guess what? I've been that guy. I've been that guy. I've been making 20% of my portfolio every single day. I got enamored with the market at multiple points. I've been doing this for years and years and years, and I've been that person. Okay? I've been that loser. I've made a ton of money, and I've blown it all, and I've lost it all. I'm telling you because I've been there, and I don't want you to be there. That's all. So if you take offense to what I just said, or if it kind of hit a nerve a little bit, or if you felt that was more personal to you personally, then please at least heed what I'm saying here, because it is something that I know I will be right on. And you can disagree right now, but one day you'll remember that I said these words into your ears, and you're going to go, damn, he was right. I was netting 5, 10% every day over and over and over, and then I lost it on a 50% day. My port was down 50% right away or whatever. That's the other psychological thing too, guys. Not only are you trading, not only do you want to focus on your capital preservation, but you want to focus on your mental capital, right? When you have a big loss or you make a stupid trade, how does that affect you mentally? This is one of the most mentally taxing things you could do if you're a day trader, especially. But even as an investor, the market plays games with your psychology all the time. If you are the kind of person, and you can be honest with yourself, if you will succumb to that or not, then you need to understand to work towards making those changes so you don't get enamored with the big gains. Because if you get enamored with those big gains and you get comfortable, and you get really comfortable, you're going to lose it all. I'm telling you, you will lose it all. I guarantee it. I actually, and this one hurts me, and I remember is a Discord member that we had in our community, and I worked a lot with him, and I'm not going to name him by name, so I'm not going to put anyone out there, but I worked a lot with this guy. And, he was doing really good. And he started trading like crypto adjacent names. So he started trading like crypto miners and stuff. And he started posting like every other day. He was making 10, 15% portfolio gains daily over and over and over. I'm like, hey man, like I'm really happy for you. You're making money, but like, be careful because I'm seeing you consistently make like 10, 15% portfolio gains on the day over and over and over. And that's like a big red flag to me. Oh, I'm fine, man. I know what I'm doing, whatever. He basically told me to piss off. 2 weeks later, he said, I'm done. I'm quitting all of this. It's stupid. He ended up blowing his whole account. I'm not saying this, and I never say this to ruin your fun, guys. I promise you. I'm saying this because I'm right. And it sounds cocky, and it sounds arrogant, and it sounds conceited, but what I'm telling you, it's the truth. I'm right. You will not be any different than me, or any different than anyone else. You will succumb to the statistic. You might be that 1 in a million where you take $100 and you trade it all the way up to $10 million or whatever. But if you don't change your habits, you will lose it all. I promise. So that's my little tirade on risk. Hopefully that hit home with one of you. Hopefully that was beneficial. If you guys like that, let me know in the chat. If you feel attacked, also let me know in the chat. But I'm telling you this because I have lost houses of money before. Money that could have bought multiple houses. And it is such a horrible, horrible feeling. Depressing. Never have I been in a darker point in my life where I've considered suicide. Genuinely. And this is coming from the heart, guys. Nothing has ever hurt me that much. To feel like such a failure at that point, to make such a stupid decision, or even if I thought everything was going my way, which it was, and just it didn't work the way I thought it would, and I lost it all, right? I don't want anyone to ever feel that way, and it's almost like a rite of passage, but and the same goes for our community, same goes for you guys watching the program right now. If I can prevent anyone from feeling that pain, from going through that heartache, I want to. Genuinely. And that's why I say environments like this, when the VIX is high, when things are really whippy, when there's a lot of news catalysts, I might seem like the killjoy, right? We like to have fun here. We keep the energy up, and I might say, hey guys, just be careful, whatever. But it's because I know newer traders especially make these mistakes and they feel bad, and maybe they make a worse mistake than me. They blow $1 million or they do something real dumb. That is so mentally taxing, and I don't want that for any of you. So hopefully even listening to this hits home with some of you guys. And I'm sure, let me know, guys. Have any of you felt this way before? Have any of you hit that rock bottom? Because I genuinely think it is a rite of passage. And if you haven't, I'd like to prevent you from getting there. I'd like to lower that learning curve. But it's almost like a rite of passage. And you got to trust me when I tell you when the market is risk off. I'm telling you that because I don't want you to go through that pain. You can be here tomorrow. Your money will be here tomorrow. You're not going to lose a lot of value by missing a trade. You're going to have FOMO. All right. FOMO is not going to do anything for you guys. You're going to miss out on something. Oh, I could have made XYZ on this trade. Great, whatever. But guess what you didn't do? You didn't lose everything. And that, to me, is worth more than the money you make in the market sometimes. EB says, capital preservation has been the game changer for me in the XT community. The base hits add up. Hell yeah, my friend. Wayne's dropping the 100% in the chat. And Toby says, fully agree there, EB. Adam really kept me on the right tracks. Appreciate that, Toby. HR says, a few times in my life when it came to the stock market because of my greed. I feel like I'm missing a word there. A few times in my life when it came to the stock market because of the greed. I feel like you're just supporting what there's a word missing there, but I think you're in line with what I'm saying here. Listen, I'll get off it now, but please guys, when you watch this program, especially some of you guys are repeat viewers and you guys know I always shout you out in the chat. When I say things are risk on or risk off, please take that into consideration with whatever you're doing. Day trading, swinging, investing, it doesn't matter. That should affect your read of the market, how you react to the day. If I say the market's more risk off, then mentally prepare yourself for a more erratic day. The market's super sensitive to news, volatility's high, whatever. That's a risk off day. If the market seems calm, there's no planned news, we're just kind of trending up or down, or the market's very technical, then that's going to be a risk on day. Or there's some days where you'll hear me being like, I'll fire out like 15 trades, especially if you're in our Discord. There's times where I'm like, there's certain days where I'm like on it. I'm like 10 trades going because that's the time to go risk on. When there's time to make money, you make the money. And there's other times where it's just not right. And that's, again, I feel like, and I hate it because some people have come back to me and said like, oh, you take all the fun of it. You made me miss XYZ trade. Well, guess what? I hope one day you thank me that you missed XYZ trade, because you missing XYZ trade, if you held on a little bit longer because you got too full of yourself, you would have lost a lot of money, and then maybe one day you'd come back and thank me. So that's my little tirade. HR says he's agreeing. Okay, cool. Alrighty. Let me see if we got anything else going on here. So the market right now, we're over our open price. We're at this LOI here of 658.33. Volume's been pretty good here. Actually, volume's been increasing on this little push here. Watch 659.11 because we got a little double LOI action here. So see a little bit of resistance here. We're a little hot, a little overstated here. So experience, I would anticipate some level of a back test to 657.89 at least before maybe getting a break higher. Let's check out our Qs. Qs are basically at open, V bottom. At open, though, you're going to want to see big tech take on more responsibility for this rally, mainly due to NVIDIA sharply falling, so gapping down and falling. So you want to see NVIDIA, I would say, very simple goal here on NVIDIA, very simple number to know, 18250. Again, that strike price that we talked about earlier, this call up here, watch that. And then watch 183.30. If we can get through those two levels on NVIDIA, that's going to push big tech in a major way, in my opinion. Now, the other thing I was noticing out of the corner of my eye, and I didn't say anything yet, is Google performing today. And if you've been watching the show now, you've heard me say many, many times, Google is your canary in the coal mine for your Mag 7. If Google is performing, the Mag 7, it's kind of like it's going to let you know the sentiment of the Mag 7, or which way the sentiment is pushing, at least in my opinion. And that's how I've been reading Google lately. And again, if you don't believe me, fact check me. Go back and look at the days where Google's been bearish and bullish, and you'll see the rest of the Mag 7 tends to go the same way. Yes, the Mag 7 trades together, but Google, because of how it's positioned right now, is kind of leading the charge, so to speak, for the Mag 7. And so far, right, let me not get ahead of myself here. Decent little move here, so we'll see if there's any continuation there. UVXY is pushing down. We rejected that 1250 area. We're still very green on the day on volatility, up 9%. Your VIX is actually moved down quite a bit. So this was up, I believe, 18%. Now only up about 12%, and we're testing this 2142 LOI. As I mentioned to you guys at open, so we're actually below open's price on VIX, or at least market open. Getting sub 2030 is what I'm looking for today on the VIX. If we can get sub 2030, that favors the bulls a lot today. Like a lot. Now, keep in mind, we've got those bank earnings calls going on, I believe, right now still. I know I said it earlier. You got Wells Fargo going on right now. I don't know if Goldman Sachs has ended there. Someone can tell me in the chat, but I know they were starting at 9:30. And you got Citi at 11. So we've got those earnings calls coming through right now. And then the big one today, again, is Powell at noon or 12:20. So that's going to be something you're going to want to keep on watch. Now, all of these things, again, could swing the pendulum completely the other way. I'd also like to remind you that the main reason for the fall, again, has been emphatically reversed. It was literally news perpetuated with poor translation. The president of China, now that I have a lot more viewers here, I'm going to reiterate this because I know I said it at open and not a lot of people were here. The president of China essentially said, we will fight tooth and nail against your tariffs if you put tariffs on us. Or, I'm sorry, that's what the news was saying he said. What he actually said was, if you want to talk, we'll talk, and if you want to fight, we'll fight. Which, again, is a very leveled response to any human being in any environment at all. Hey, if you want to talk to me, you and me can talk. Right? If you're in person or whatever. But if you're going to throw a fist at my face, guess what? I'm throwing one back. That's a very level-headed, reasonable response to say to someone. That doesn't rock me either which way. So what the market heard was the second part of just, hey, if you're going to punch me, I'm going to punch back. Or we're going to fight with all of our might or whatever against these tariffs. Sold off of that. I believe now, or what I should say, is I believe market makers were taking advantage of that move to load longs, which is why I was kind of contemplating wanting to see that 50 MA tap for a long, because part of my thesis here is that this is just trying to get new liquidity, or even sucker in some bears, but get new liquidity down here, which actually substantiates, or I should say supports, this V-bottom kind of move on the day here, and a potential continued rally to the upside, again, if volatility plays ball. So this is where my head's at. If we see those bank earnings aren't too bad, and if we see really Powell's going to be the big linchpin here today, if he leans more dovish, which is going to be very interesting because Powell's speaking. So we have more bank earnings tomorrow, but we have Powell speaking after the bank earnings. So why bank earnings are so important is because what we see from the banks could influence, let me pick my words carefully, not that it could influence, hints at us as traders what the Fed may do, because it kind of gives us extra insight to how people are reacting to borrowing money at this point in time, essentially. And that information gives us an idea of what the Fed's looking at, so to speak, right? So if earnings calls are perceived as more bullish, and if Powell makes comments that are seen as more dovish, and I'm saying seen as, right? Because sometimes we hear things and we think, oh, that's bearish, or oh, that's bullish. No. Sometimes bad news is good news is bad news, right? And that's for various reasons. But that's why I'm saying if the bank earnings overall are perceived as bullish, and what Powell says is perceived as dovish, then you're more than likely going to have at least a gap fill on the day. And I would bet even a break over yesterday's high. That's how confident I am. But a few things with that. We need NVIDIA to participate, which it just started to. We're right around that 182.50 area. I need to see this over 183.30. And we need volatility to like die. Like it needs to get shot. It needs to old yeller in the back of the head. Boom. We need VIX to drop a whole point here to get under 2030. If we see VIX under 2030, if we see Powell leaning more dovish, which that might be the catalyst to drive VIX sub 2030, then we're going to have a move where the SPY will close the day over yesterday's high. Yesterday's high was 659.29. No, it wasn't. Was it really? Am I on the wrong day? Sorry, 665.13. I'm like, that can't be right. We're right there right now. And that would leave a really sick candle on the day here. Basically like a double bottom off Friday's low. Not exactly. Still above that 50 EMA. It's going to fulfill the desire of needing to back test to some people like myself. It's actually going to put us above all of our short-term EMAs. So that's going to put us above our 8 EMA, 21 EMA, our 13 EMA, all of the low short-term EMAs I track personally. That puts us above everything. So that'll be a full trend reversal essentially here, where again, everyone's saying buy puts and everything, be short, etc. I'm going to strongly disagree, at least so far. It favors the bulls here so far. We will see that can change. Tom saying good stuff, Adam. Appreciate it, Tom. And EB dropping the old Yeller. Hey, man, I'm serious. We got to take VIX out back and shoot it like old Yeller. There's Google pushing. You guys know I'm still long Google. Google. Or Google calls, I should say. Now, Microsoft is below those 2 trigger points here. So I talked about that pre-market. This is the big one. 512.76 is super, super important on the daily. But this is also a secondary level of support you got to watch. 510.80. So we need to see Microsoft get another 3 points here, essentially, before that participates possibly in a... I almost want to say a NASDAQ rally. Now, how it's sitting right now, kind of got like I would call this a more bullish version of a cup and handle. And what I mean by that is you got like a nice little cup here, similar to a V bottom on everything else. And we've been just banging our head here, building some level of a base where it's not like traditional handle where price action moves down a bit, but price action has just moved sideways. And that 200 MA is acting as resistance while your short-term EMAs are pushing up. And essentially you're making not necessarily higher lows, but equal lows, while you're making basically the same highs here, a little bit higher highs. So you got a straight range here where if this breaks to the upside, you more than likely get a harder move to the upside. Then if it fails to the downside, you probably won't get as big of a move to the downside. So I do like Microsoft long here. And as I'm saying it out loud, I might take it. It's risky, but why not? Let's look around. So excuse the modicum of silence. I'm just going to look at some options chains and see what we got cooking here on Microsoft. Now, Microsoft options tend to be very gappy, which is part of the reason why I do and I don't like them. It kind of depends on how volatile it is, if I like the gappiness of it or not. Because you can make a lot of money on a wider spread, but you can also lose a lot of money on a wider spread. So I might wait a little bit. I might miss this move. I'm not in love with the premiums there for the risk, I guess is what I'm trying to say. So I'll wait on that. We'll come back to this. Those might decay a bit. The premiums might go down. You got to be careful when you're buying Microsoft options. If you're not careful, you can make a big boo-boo. So we'll come back to this one perhaps. Google pushing. So just full transparency, I still have open, which are red, some weekly 245 calls on Google right now. I have those open at 310, which are they're almost at break even, 290. So I'm still long Google here. And I still think essentially, especially if we get this rally that I'm like trying to forecast here on the day, that Google's going to lead the whole Mag 7. Essentially it is. Look, Nvidia's down 3%. Google's almost green on the day. Microsoft's red. Apple red. Tesla red. Amazon red. Meta red. This is the strength. Google is your strength. And again, for what it's worth, I'm long the 245s at 310. So if you like that idea, I'm so technically red on the... now I'm at break even. So if you like that idea, higher volume break here, going from red to green on Google. Love to see it. Yeah, I'm happy I waited on this Microsoft. Wait on this. This may work out, but the risk to reward here is a little sketch with how the options are I should say how they're priced right now. I don't love the dollar risk, I guess is what I'm trying to say. Tesla making a nice little cuppy kind of look here. Be careful on Amazon. I know a lot of you like that name. We wicked under the 200 MA, so this is a good look as a swing trader, but this is still having a really hard time staying over that 211 area. If I was a swing trader, so I'm using my words very carefully here, I'd want to see a close over 211 before being long on Amazon. For context, Amazon has not been over 211 since the second or third week, 919 in September. Is not closed over 220. I'm sorry, I keep saying 211, 221. So the bears are all over Amazon, and this candle, like this weekly candle, might be the start of an actual reversal here. You got the 200 MA on the daily, you got the weekly here wicking as well off the 50 MA. But I would not be long Amazon until we have a weekly close above 221. You can intraday trade it, obviously, whatever, but I would still lean on the bear side of things on Amazon until there's a very clear sign, at least in my opinion. Meta's still fighting that 70802 area. Really shoved its head underwater here at 699.33, basically that psychological 700 level. Big buy there. Now you're kind of hitting a little bit of turbulence here with a 200 MA on the 5-minute, offering some level of rejection here. Still above your short-term trend here and still above the 70802. So getting a back test here, bounce and go would be preferred and be very likely if the meta bulls want to keep this afloat, at least at this point in time. Nvidia failing that 182.50. That's going to be a big spot to watch. Again, 182.50, 183.30. Those are two spots on Nvidia you're going to want to watch today. If you're a bull in general, you're going to need that support from the NASDAQ. And as you can see, the Q's rocking and rolling here, mainly lifted on its shoulders by Google, holding the entire stock market on its back like Atlas, trying to do all it can with all of its might to hold up the stock market. And it's trying its best right now. SPY just got short of that 660 spot, rejected, rounding off a little bit here. I would prefer it actually drives a little bit lower, so I'd actually prefer back test 658.33 before bouncing and pushing, breaking that 660 high if I am looking as a bull on the day. Now, so far, we've held a pretty good bull trend, and so far, that's been mostly supported by a decaying VIX, which is good. So this is showing there's price agreement right now on the market to continue, so far, to continue its uptrend or continue its trend to the upside. Hey, if we get an early bounce here, I'm not going to be mad about it. If it can bounce at 659.11, that's rad. Love it. Yeah, so far, volatility is getting hammered a little bit. So we'll see. Again, I wouldn't get too excited either which way until we're sub 2030. And you saw I only made one trade today so far. I only got that 10% gain. That's it on Nvidia. That's it. No more money. Now, again, I have a Google position open, which I'm now making money on. Yay. So I have a Google position open, and I have other swing positions open that I'm making money on, but I'm not aggressively day trading because of what I've already explained to you guys ad nauseum. The small account just went green on the day, so that means the sentiment is starting to shift. I have, like I told you guys before, I have a small account in our community. It's called Seed to Tree, where I'm basically trading very... I lean towards small and mid-cap stocks, and I've actually been using this as my own indicator. When that account is green, that typically means sentiment is really good on the stock market and bullish. When it's red, it tends to mean sentiment is not too great. And so far, we're green. We just went green on the day. So that tells me that sentiment is leaning good. So that's good to see. Powie making a little bit of a move near 45 bucks. Wolf getting a little bit of a pop. What name to... Oh, I just got an alert for Joby. Toby, if you're still watching, you remember the Jobster? Joby? Job. So... this is Joby, and this is offering... Well, let's see. This is Joby, and this is offering an interesting setup here. So on the day today, we just wicked this purple line on my chart. That's my 50 MA, and it's right on this trigger point where I want to consider a long. Now, so far, I'm not long on Joby, but I am considering a long, mainly due to this volume reaction at this key LOI here. So they did have an offering recently, which is why we got shut down a little bit. And these aviation stocks are very, very volatile. It's a hot sector right now, right? And where this is sitting right now does offer some interesting risk to reward, especially with a stop underneath that 50 MA. On the daily chart right now, we had a little bit of a cool off after this little pop back up here. And on the weekly chart, it looks like it could be rounding off, especially with somewhat of like a double top kind of look here. But you are maintaining the bull trend to the upside. I actually really like Joby here, at least for this gap fill, where I could tighten up stops on this. And if it breaks this double top, it could get kind of like a blow off top kind of move here. This is definitely a momentum trade, so you're going to want to trade that with that risk in mind that it's a momentum trade. But with that being said, if Joby can stay above the 633, I might actually open it very soon. I actually like a long position on Joby quite a bit here with a stop underneath the 50 MA. Currently, that's trading at 1577. So you're risking about $1 downside here to fill the gap. That'd be roughly $2 to $3 upside. So 2 to 1, 3 to 1 risk to reward here on Joby if you like that idea. There you go, Topester. You know what? I'm going to put my money where my mouth is. Actually, I'll wait. See, this is the thing. Typically, I'd wait for a back test, tap the 200, come back down, and then get in. I'll do that. I'll wait. We'll wait for this 8 EMA tap. If I get this 8 EMA tap, we reject the 200, and I get the 8 EMA tap on the 5 minute, I'm long. I will long it live with some equity. So we'll stock this one for a minute. My original trigger, so that's why that alert went off, was at 655. So we're actually still around my trigger point. Am I going to regret it? I'm debating if I want to go half size and then deploy the other half. Because again, I'm trading momentum. It's different than just a normal trade, right? You know what I'll do? I'll grab half now. We'll grab half now. Bye. That's good. All right, I am now officially long Joby half size for now. Now deploy the other half. Hold on, I gotta put this out for our seed decree people. I will deploy the other half off of the rejection, if we see the rejection of the 200 MA. Sorry, gonna be radio silent just for a second. Okay, sorry. So I'm gonna keep an eye on this. Put that on my watch list. And I'm going to add another alert. You know what I'll do? I'll just move this one down. So I'll make my second ad around 650. We'll judge it on momentum. If we just blow through this and we go, then I just ride at half size and I still win. Google, let's go. Let's Google. Get it? Leading the pack right now for big tech is Google. Currently, my calls have gone in the money. I had those 245 calls. Now we're happily sitting in the money. So we'll see if we get a little bit of a push here on the Googster. Love to see it. HR says, I like Joby and what they're doing with the VTOL stuff. Got in at March at 614. I traded Joby a few times. So the very first time I traded Joby, and I know Toby because he said I'm all ears, and I know he loved this trade. I want to say it was April calls. I don't remember what the hell happened. I got in below this downtrend, so this orange line on my chart, which actually I think got deformed now. Hold on. I got in, I can look at the logs, but I don't remember. But I got in before this big boy. I think I got in down here, or I got in over here, I think. Yeah. January, February, March, April. Either way, I got in and made a lot of money. I got up here to like $11, 1068. That's where I got out. So I thought that was gonna say the Noobster, but it says the Noob Styler, saying great play on Google. Thank you. I'm still long it. I might trim some now. What are we at? All right, I'm going to trim some Googles. Trim some Googles. All right, I just took 19% on Google. Those are the weeklies for those of you that are in the Discord. Full transparency, I have actually a pretty decent size Google position. I've got Google weeklies, I've got a Google swing, and I've got another Google swing that's far out the money, like very far out the money. So I've got probably a little too much Google exposure, if I'm being honest with you guys. Whoops, why did my screen go away? Oh no, there we go. What's that? 3, 2, and I'm just updating my log. There we go. Swing. Okay. Beautiful. Thank you, HR. Oh, it's Marcel. All right, brother. What's up, Marcel? Yeah, I don't know what YouTube did something where they changed some of your names, and now they're like your @handle, not your actual name. I don't know if that's a setting I have to fix or something, but oh man, Joby going. Go, Joby, go. Go, Joby, go, Joby, go. I'm up like, what, 0.5%? Like, what am I celebrating right now? How much am I up? 0.66%, let's go! Yeah, I remember it went in the money, whatever it was, Toby. All right, I guess if I don't get my back test, I'm riding half size on my Jobster. On the Jobster, we'll still make some money. Maybe I should have taken calls. No, it's okay. All right, here, I'll make a deal with you guys. Here's the deal. If Joby back tests around 1650, I open calls. So instead of my other half being equity, I'll load calls on Joby. Just to diversify just a bit. I'll do that. How's that sound? We'll do it live if we get the live. If we can do it live, we'll do it live. Marcel saying, insert the Patrick, I have $3 GIF. Yes, that's it. So guys, if you came to the stream, I know I've got a lot more people watching. I mentioned how I'm wearing this sweatshirt for a very specific reason. And if you come to my streams a lot, you know that there is a tiny meme. And I'll explain the meme real quick in case you haven't been here. I wear a specific shirt. So one time I wore a shirt. And the shirt I wore elicited a very funny response from my father, who watches at home. Hi, Dad. Because, hey, he taught me everything about investing, right? He loves watching me. And he made a funny joke because I was wearing this shirt. And he said, oh, your shirt says Green Day, and all I'm seeing is red in the market. And I thought that was funny. And ever since then, every time I've worn the Green Day shirt, it has been a red day on the market. I'm wearing the Green Day shirt. I'm trying to break the curse today. Today, we break the Green Day t-shirt curse. That's right. We're breaking the Green Day t-shirt curse today. It will be a Green Day on the market, as long as Powell doesn't mess it up. It will be a Green Day on the market. We're breaking the curse today. Get hype. No more t-shirt curse. And if it finishes red, then the curse still exists. And damn it, the curse is still around. But if we break the curse will be broken, and I will rejoice because the Green Day shirt will no longer be a curse for a red day in the market. It will be a blessing for a green one. And that's why I wore the shirt today. And I zipped it up and everything because I know all of you vehemently watch me and you know how important the Green Day shirt is. And you'll know what that indicator means. I didn't want anyone to get any sort of thoughts. And all I've spoken about all morning has been how I would lean more bullish than bearish on the market. And assuming we hear a dovish kind of Powell, then we will see a bull day. We will break yesterday's highs. Volatility will get shot in the head, just like Old Yeller in the back of the shed. Ooh, a little rhyme there too. Shot in the head, just like Old Yeller in the back of the shed. Woof! The Green Day curse will be lifted today, as long as Powell doesn't mess it up. Today is the day. EB says short Adam. Toby says topping the market again. Hell no, Toby. We're going. I literally showed this shirt right here at 10:43. Literally the high of the day. The irony, if this is actually, because I wanted to show it before the end of the stream. We're getting near the end of the stream. So the irony would be hilarious, actually. Like, that would actually be really hilarious if this ended up being the high of the day, which I'm going to have to clip this then if that's the case, and then the curse may not be lifted. But I have faith. I believe we can do it. Yes, we can. Just got to see a little momentum here behind NVIDIA. Get volatility, a little bit of a headshot. Market closes over yesterday's high. And the Green Day curse will be lifted. All will be well in the world. That's what we're looking for here. Anyway, guys, we're going to wrap it up here in a moment. So if you have anything you want to drop in the chat, now's the time. But we're getting ready to roll into the end of the day. Or at least the end of the stream, I should say. Been a good stream. I think we learned a lot. We had a good conversation. We had some serious times. We had some laughs. We even made a little money. Which is everything we look to do here on the Atomcash angle. We have a good time. Get a laugh or two. We talk about how chicken nuggets from Costco are the most superior chicken nuggets you can get anywhere. Kirkland brand, Kirkland signature chicken nuggets. Fantastic. There's no chicken nugget better. And the macros, for those of you that weightlift, the macros are incredible. Compare that stuff to like Purdue or the other kind of chicken nuggets out there. Incredible macros. You made some money, you learned something. You also learned on how you shouldn't be a doofus trading the market and protect your capital. What a wonderful stream, if I do say so myself. And we just made a new high, so I can't say I topped the market. Let's go. Let's go. Anyway, we'll do one more roundabout, one more quick look at things. Oh, Marcel, I guess you changed your name. Markets can't take us down. Not yet. HR says Dino Nuggies. No, man. I'm telling you, if you don't go to Costco, get a Costco membership. You're going to want to buy the Kirkland signature brand, the lightly breaded, I believe they're called chicken chunks, which sounds disgusting now that I've said it out loud. The macros on them, phenomenal. Not very high carb at all. In fact, their like low carb chicken nuggets that they sell, like their healthy brand, has worse macros than their normal chicken nuggets. They taste amazing. The seasoning's great on them. And you get a full bag for like $12 and it's like 4 pounds of chicken nuggets. Solid, just saying. Decent protein. Anyway, NVIDIA, those levels to watch again, 182.50, 183.30, the two levels you want to keep a tight eye on today to give you that extra momentum to the upside, especially if you have NVIDIA participating. We already have a lot of strength coming through Google. So seeing NVIDIA participate will give you guys a little bit more of a bull edge on the day. Told you guys what we're looking at here for SPY. Obviously, we're still going through the bank earning things right now, and we have Powell coming to talk in 2 hours or so, 1 hour and change at 12:20. That can change the whole thing, guys. That can change everything. So we'll see. Hopefully, we have a dovish Powell. But so far, the reaction off the day has been pretty solid. And like I said, the big catalyst on why the market went down, it's kind of BS. The gap down is a BS reason. Mainly due to poor translation and the market sensationalizing what was not true. So essentially that in itself should revert price action back to neutral, right? Should go back to where it was because there's no reason for it to not be there, theoretically, because the reason it moved down in the first place was proven false. So the market should just go back to where it was from a logical standpoint, right? But on top of that, again, we have Fed speakers, we got bank earnings, and we got, most importantly, Powell. Now, after Powell, we have 2 more Fed speakers for the rest of the day, but market is more prepared for Powell than Fed speakers. Our IV right now is still high on the market. We're at 26 at the money right now on your 0 day. So IV is still pretty high on the SPY. Your volatility is still pretty high on the SPY. We'll remind you, as we sink 12 on UVXY, great start. You're going to want to watch 2030 for the VIX. We break 2030, you're more than likely shifting to a more, I want to pick my words carefully here. I'm going to say a risk on environment, but very short term. So the market will be more bullish under 2030. And I don't really even want to say risk on environment because a 20 VIX is still decently high. But at that point, if you want to take a little bit more risk, you feel a little bit more comfortable taking risk, assuming we stay under that 2030 level, at least intraday. So if you're a day trader, that's what you want to watch. The VVIX has just been grinding down, so that's good. And like I said, UVXY is also supporting the similar move. So this is showing our short-term volatility and our near-term volatility are both moving to the downside. Now, very interesting. I want to point this out as I start to wrap up here. The most interesting thing I'm noticing right now is actually a change from yesterday between the relationship with the VIX and UVXY, where like UVXY tends to look at our more near-term volatility. Again, I'll remind you, I believe it encompasses 60 days worth. VIX is actually up more than UVXY right now. And yesterday, that was the flip side, which is interesting because the VIX was lower, making new lows a days, while UVXY was still above its low a day. Why this is interesting is because this could be hinting at volatility decaying through the week, at least, while at least near term right now, it's still a little bit higher. So post-Powell, assuming it's dovish, watch for the VIX to drop much harder, assuming it's dovish, because volatility, at least in terms of UVXY, is already preparing for more of a decay move. So this is hinting at potential drop in volatility. But between now and the end of the week, while the VIX is still elevated right now, it makes sense that the VIX remains more elevated than UVXY because the market's waiting for Powell, and assuming Powell doesn't say anything of, I almost want to say of value, but anything detrimental to the market, we should see the VIX drop. We should see UVXY drop even more, and as a result, we should see volatility drop pretty hard, and the SPY do what I said it's going to do, essentially. Keep an eye on Google, obviously, like I say, is your canary in the coal mine. I'm happy I didn't open up those Microsoft calls. I might have gotten a little bit of a trim there, but we tapped that LOI, came back down, now kind of like a head and shouldery kind of look here. Not great, but assuming you hold the lows here, can move back up. I wouldn't really classify this as head and shoulder. I would just classify this, me personally, as like a fake out for the range break. I know you can say, oh, it's got a shoulder, it's got another shoulder, here's a head, but I would say this is more of like just a false break, mainly due to this LOI being so close that it was just like a failed breakout, not necessarily like a head and shoulders, traditionally speaking. What I'm trying to say is I wouldn't be bearish on Microsoft here. I also wouldn't be bullish yet. Apple getting a nice little rally here. Again, Apple is not bullish. Well, now it's got room to breathe. But Apple really isn't bullish longer term until it's over these two key LOIs. It's got plenty of room to make up now, though. So, obviously, we could see a nice move on Apple here in the near term. Longer term, it's not bullish until we're over these two key LOIs up here at 257, 259. Tesla left a wick on the day so far above yesterday's open price, right? We're at yesterday's open price actually right now. So we'll see if we can perpetuate some level of a rally above that, also above the 21 EMA. So Tesla might try to help some level of a rally here. Basically watch this high. This is a 5-minute candles here. Watch the high of this candle. 425.35 to see if any bullish sentiment comes through on Tesla. Otherwise, I would just be super careful. Again, not looking to short it, but I wouldn't be aggressive bull either just yet. Amazon, again, can't say that. I personally would not swing long Amazon options until it's over 221. There, I had to change my words very carefully. Doesn't look bad. Again, we wicked below the 200 MA, like I said earlier in the program. We wicked below the 50 MA, like I said earlier in the program. On the weekly, we're currently at last week's low, which is 216. So on the day-to-day, I'd want to see the bulls defend at least 216. You've got a nice, what I like to call in this program, an EMA sandwich, when our short-term EMAs move up to our long-term EMAs and they squeeze, which typically get a break one way or the other. The way this is, we have our short-term EMAs pushing up over our long-term EMAs pushing down, at least the 50 MA here, which is indicative of showing short-term momentum versus long-term, whatever the opposite of the word momentum is. Bear trend, I don't know. So breaking this could lead to a nice little pop here, as it shows that the bulls are trying to push up Amazon on the day. And Meta, again, the only thing you really got to watch here, which, look at this, wicked it twice now so far, 708.02, big level over the 200 MA. You can use this on the 5-minute because you can see a clear resistance here. Break that, this thing can pop. So the way that our Mag 7 are set up, as we just reviewed all of them, they're all set up for a bull move. Now, bull moves mean nothing without follow through, but all of them, you heard me say I didn't say I'd be short any of them, essentially. Microsoft, I even said this head and shouldery kind of look is not a head and shoulders. If anything, it's just a fake out breakout. Like, it's not, this is just a big base, and this is just a fake out because of this LOI being so close. This is actually, I would lean more bullish than bearish. And Apple is the room to make up. Tesla, again, I wouldn't be bullish until over 425, but I'm not shorting this either. I wouldn't be short, and I wouldn't be intraday short Amazon either, in all fairness. Now, I wouldn't swing, but I wouldn't be intraday short on Amazon either. And Meta, as long as it stays over this level, and eventually, if you can break these highs, will have a nice pop. So all of the Mag 7 are looking strong right now. Assuming NVIDIA can help support that move over 182.50 and over that 183.30 level. So if all the other Mag 7 names start to push up, hopefully that sinks some bullishness into NVIDIA, some sentiment to drive it through this price. And when we drive through these two prices here, you should see more volume push on NVIDIA, which is going to substantiate an even larger bull move in the overall stock market. So everything, the sentiment seems to be shifting more bullish. All right, I missed some of the chat here. Eddie says, Dino Nuggets have more edges, therefore more crispy. No, man. The Costco Nuggets, I'm telling you. Get the Costco Nuggets, get the Dino Nuggets, whatever. Compare them. I'm telling you I'm right on this one. Toby says, don't get started again with the chicken nuggets. Oh, we're doing it here, man. Marcel saying, let's see Powell crush UVXY. I'm right there with you, brother. And Amazon bouncing off the 200 daily SMA today. Needs to do something soon. I agree, as you just heard me say. Daily chart looking head and shoulder. Yeah, that's why I said I would not swing long Amazon until it's over 221. It would not be a bull. However, intraday today, if there's going to be a move, it would be like we should see a bull move today based on how this is setting up, especially if you can crack this 50 MA here. I'd just be very careful. I think if you are going to play a Mag 7 name, there are better setups. Like Google is leaning more bullish. Even Microsoft, I would argue, is a more bull setup if you want to be patient and wait for that break versus Amazon. So if you want to trade it like a Mag 7 name, even Tesla, if it breaks that high, would probably be a better bull setup than Amazon. Anyway, guys, that's going to wrap it up for me today. I hope you guys had a great time on the show. We're going to have another Halloween-themed outro, which I haven't made yet, but we're going to make a Halloween-themed outro as well, just to keep in the spirit of Halloween. And because a lot of you didn't hear it, I guess I'll play the intro again, the Halloween-themed intro for my outro. So, I guess it's 2 minutes. So if you don't want to stick around, leave. I don't care. But if you want to stick around for it. Anyway, guys, that's the show. Hope you guys had a great day. Hope you continue to have a great day. Please remember that little bit of a serious conversation we had about risk and capital preservation, right? Things look good right now, but that can change very, very soon. So please manage your risk appropriately. I gave you all the tools of what to watch today. You know exactly what to keep your eyes on. You know exactly where the risk is and where you should consider being or not being. And maybe where you want to be is not even here, and just close your brokerage app and go do something else. There's no shame in your game, as I like to say. Anyway, that's the show, guys. I hope you have a great rest of your day. And some will say you might need an edge to trade. Well, I like to look at things from a different angle, and that's always what you get right here on the Atomcash Angle. Hope you guys enjoy the rest of your day. And remember, precision beats prediction every damn time. Enjoy the Halloween intro.
The time has come, it's almost here. Another day on the markets, approach with no fear. The stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Digging deep with no regret. Red and green bars leading the way. Welcome to the angle. No time to delay. auction call.